Hi guys, welcome back. I can't believe it's February already. So it's probably a bit late to say Happy New Year to you, but anyway, Happy New Year. But what a month it was actually, summer month it's been. We've had success on the tennis court for Australia. We've had, success on the cricket pitch as well. Probably two sports I don't take a lot of interest in following, but can't be more thrilled for Dylan Alcott, and great recipient of Australia in the Year, and Ash Barty, of course, just the queen of all of our hearts, and that's taken nothing away from the Special Ks, the two boys, in respect to winning the doubles as well for first time in a long time. So, and most importantly, you see kids are returning to school as well. I saw that on Facebook yesterday. A lot of kids' first day at school, which was great to see. So hopefully we're starting to see some new normal routines actually starting to come back in earnest. January is actually normally a quiet month on the economic scene, but not this year. Inflation and speculation about rising interest rates have dominated the month, sending actual global shares, especially say US shares, they tumbled nearly 6% in January after a large gain last year, and Australian shares have tumbled nearly 7% as well. The Australian ASX 200, as an example, is under 7,000 points. Again, it's actually up a bit as of today, but which creates obviously some real opportunities. One of the things, of course, was US inflation was actually running at nearly 7% just for the month of 40-year high, just for the month of December. Australians was actually at 3.5%. And when you actually have a look at that, that's a 7-year high. So the Reserve Bank has a range of between 2.5 to 2.6%. So they're saying they won't lift interest rates until 2024. I don't believe that's true. They're talking about unemployment will have to be close to 4%. Low, we're currently at 4.4. So I actually think you will see interest rate rises in Australia this year, and definitely the Fed have come out quite strongly and said there will be interest rates rises in the US. So realistically, one of the biggest influences on inflation is actually oil prices, not just the cost of groceries, but with things being stuck on the wharf, shortages of avocados, and of course Brent crude oil has jumped dramatically in price. And to put it bluntly, not what's $90 a barrel mean to us all. What it means we're paying 170.4 cents at the petrol bowser. So thankfully we're still not much traffic on the roads, which means we're not eating as much traffic. Housing's actually been interesting, the momentum. Still got good momentum in Sydney and Melbourne. Adelaide had recorded the most improvement, up 2.2% for the actual month. National prices are still up 1%. There is speculation, of course, that the Australian housing market is a bit overheated at the moment with fear of missing out last year. We'll see how that comes this year with debt ratios, especially if interest rates start to rise. The Aussie dollar fell 2.5 cents in January to close actually just under 70 cents at the moment. So the greenback did strengthen, and that was based on interest rate rise speculation. So based on that, if they rise interest rates, you're going to see the US dollar keep strengthening against the Australian dollar, which is a good reason whether we hedge or unhedge part of our portfolios. Realistically, when we're going forward, we're looking at forecast GDP growth of around 4.25%. Sorry about that, guys. Outlook is supported by households and business balance sheets in general, so things are looking quite okay here at the moment. Although, it is hard to sometimes go to your local restaurant because they're closed due to staff shortages, and also with the uncertainty of the virus going around at the moment, we've certainly had a few staff members out of work for the last week or so. So basically, the RBA's, their primary three goals regarding monetary policies is stability of the currency of Australia, the maintenance of full employment in Australia, and the economic prosperity and welfare of the people of Australia. What we're doing in line with our portfolios, we're still steering clear of commercial property. We think the Australian market, we're looking at some of the great profits we made in the US market last year, starting looking at taking some of that off the table now and going back into the Australian market, especially at the moment we're thinking is starting to offer some decent value with this correction that we're going through. Probably still going to see a bit of instability over the next month or so. Realistically, where we are right now is creating those Boxing Day opportunities. Whereas if you look at last year, some great returns last year. some good pricing coming in this year, which realistically should hopefully set us up for a good 5 years in the future. Thanks for your time, guys.